To the Floor Show and Jay Jacobs, who runs BlackRock's Thematic and active ETFs. Jay, just when you thought investors were peeling their fingers off the tech trade, suddenly the tech's grip, its relentless grip, takes a new hold with the Apple and Google news. And here we go. We've got technology as the lead when it comes to sectors. So what does this tell you about the trade?
Well, I think the good news here is a lot of the performance from tech companies this year is being driven by earnings. This is not speculation. This is not valuation expansion. This is companies delivering results because they are selling more product and services. This is what we've always wanted with AI. We have wanted this to be a revolutionary product that is adopted broadly. We're starting to see that really come through in the earnings of these companies, justifying the valuations that were excited for AI, but now being proven out.
And, you know, you guys have a whole bunch of AI-focused ETFs, but not to mention you also have a bunch of iShares ETFs that hold a lot of Google and Alphabet, obviously, and a lot of Apple, too. But how do you make sure that investors understand they shouldn't be doubling up on some of these?
Well, it's really about looking under the hood. Now, one of the developments that's happened in the markets this year is a lot more focus on concentration. You know, we've talked about the Mag 7, the top 20 stocks in the S&P 500.
Right.
A lot of weight is tilted towards those mega cap tech names. And what we're seeing more sophisticated investors do is really try to play with concentration, either do concentrate more in the top names using a fund like Top T, which is investing just in the top 20 names in the US S&P 500, or looking beyond the top 20 names and trying to balance it out with kind of the mid-cap stocks in the S&P. So looking at concentration as a function of the markets has become a really important trade for investors looking at diversification and growth.
Well, for a minute there, people said, OK, the rotation is real. Look at the Russell. The Russell was the best of the major indices during the month of August, up 7%. We could show a one-month chart there. But then on top of it, now suddenly you see the Russell down. Granted, it is one day, but the NASDAQ is up. So give me a sense of where you see the rotation trade, not necessarily entirely out of tech, but broadening out.
We don't see a rotation happening yet. What we see is more granular picking of more attractive areas of the market. We're seeing it in tech where people are looking within that sector for AI names. We've seen hundreds of millions of dollars come into RD and BAI, our two AI ETFs. But on the value end of the spectrum, we've seen several billion dollars come into infrastructure ETFs this year, where people aren't just blanket buying value stocks. They're saying, I want real assets. I want things that are in the ground, that are moving cars, electricity, water, et cetera, around the country, and really focusing on infrastructure stocks as well.
Didn't infrastructure used to be a defensive play, and now you see it as a growth opportunity? What else is in there? I mean, when you talk about, say, for example, compelling income components here, those guys have a lot of dividend-paying opportunities.
Infrastructure is one of these just incredible asset classes right now where you absolutely can see the defensiveness of it because these are lower volatility stocks, but it has tremendous growth tailwinds because you're seeing so much effort to build out manufacturing in the United States. And if you're going to build more chips, if you're going to produce more energy, if you're going to build more kind of heavy industrials in the U.S., you need the roads and highways and airports to support that. And so there's a lot of effort to rebuild infrastructure in the United States to support manufacturing efforts.
Okay, and that would be BILT, B-I-L-T. It doesn't have that much in assets under management. Really quick on gold. Gold is hitting a record. There are a bunch of gold ETFs, not just yours, but obviously Van Eck has the junior gold miners, there's the GLD, and you guys certainly have an opportunity here. Is it too expensive at the moment? Many of these are hitting all-time highs.
No, I don't think so. We see a lot of investors looking for diversification and differentiation in their portfolios. So we've seen, close to $10 billion come into IAU. We've also seen tens of billions of dollars come into Bitcoin with IBIT this year. And it's coming a lot from the same place, which is people are looking for assets beyond stocks and bonds to diversify their portfolio.
Jake, great to see you.
Good to see you.